it should also demonetize not only gold, but demonetize the bond market, demonetize the property market, demonetize the stock market. So now you're talking about Bitcoin worth 100 trillion, 200 trillion, 300 trillion. These are all completely within the realm of highly probable.
Is Bitcoin poised to capture the majority of the financial capital globally? When we start talking like this, Michael Saylor's $13 million price prediction sounds like it's just the beginning. Today, I dissect the Bitcoin eats the world thesis by focusing on three key areas: its ability to suck market share from gold as a store of value, its ability to suck market share from real estate as a store of value, and finally, nation states around the world adopting it as a means of national security. What's up, everyone? Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content here at Swan. Now let's talk Bitcoin. Max Keiser went on the Robin Sear podcast earlier this week, and somehow he out-bullished himself. Take a look.
Those who decry the volatility as a reason not to own Bitcoin haven't really thought about it much. You know, it's particularly if they look at the dollar and say, well, there's no volatility in the dollar. And I'm like, that's true, but you have a mathematically guaranteed decrease in purchasing power with the dollar. That's part of the game of the dollar, is that it looks stable, but it's leaching value every second of every day from your hard work is being leached away. Bitcoin is the opposite in that you are gaining purchasing power for your hard work every single day. And yes, the price vacillates in fiat money terms is an indication of the weakness of fiat money. It has nothing to do with the weakness or relative strength of Bitcoin. 1 Bitcoin equals 1 Bitcoin. Just like 1 ounce of gold equals 1 ounce of gold. You know, gold is now hitting new all-time highs. It's still 1 ounce of gold. That the amount, the supply, the global supply, which is roughly up maybe 3% a year, it's not dramatically changed from a year ago, 2 years ago, 3 years ago, but the price is up dramatically. What's that telling us? That's telling us that the fiat money world is losing confidence. Now, if you look at Bitcoin versus gold, well, gold's been around for a long time. It's got a total market cap of roughly $13-14 trillion. Bitcoin to maybe $1.2 trillion. You know, Bitcoin's going to at least equal the market capitalization of gold in dollar terms. So you've got now a 13-14x just to get to gold, which is a lot higher than the current price. And then, of course, it should exceed gold. It should also demonetize not only gold, but demonetize the bond market, demonetize the property market, demonetize the stock market. So now you're talking about Bitcoin worth 100 trillion, 200 trillion, 300 trillion. These are all completely within the realm of highly probable going forward. And so don't look at the price. The price is the least interesting data point of Bitcoin. It tells you just about nothing versus the hash rate or the difficulty adjustment or any of the other underlying metrics of the protocol are much more telling and informative about what's happening than the price. The price is just a proxy for how quickly the fiat money world is disintegrating.
So what does it look like for Bitcoin to eat the entire financial world, as Max alludes to? As we discussed in yesterday's video, Bitcoin is poised to slowly eat away at the monetary premium of gold as a store of value. And I expect it to make significant headway at that this cycle. Well, its next victim after gold is the most popular way globally to store value: real estate. Leon Wonkum, a real estate developer and Bitcoiner, was on Preston Pysh's podcast earlier this week.
If you look at real estate, it has not become so expensive because its utility increased. It has become so expensive because people want to use it to store value subjectively. But Bitcoin is not an investment, it's money that you save. That is very important to understand. And the reason why real estate is so valuable is also because it is used as money. So the reason real estate is so valuable today is not because it is such a great investment. It is because people literally use it as money, and it was inflated through currency debasement, right? So once you understand that real estate is so valuable, not because of its cash flow, but because it is used as money, and then you understand Bitcoin is better money because it is scarcer, it's highly liquid, it's mobile, it's more divisible, it's permissionless, it's programmable, right? It's purpose-built money for the digital age. You understand that Bitcoin is superior money to real estate and therefore a superior savings tool. Bitcoin outperforms real estate by an order of magnitude that is hard to imagine because it is a monetary savings technology that was designed to increase in purchasing power. And because it's absolutely scarce, it outperforms real estate, which is relatively scarce. Since we can assume that people would prefer saving in Bitcoin rather than investing in real estate, we can also assume that the monetary premium that sits in real estate flows into Bitcoin.
The thesis does get a lot more interesting when you consider the downstream positive effects this would have on the market. Monetary savings premiums being pulled out of real estate would mean that the value of housing would slowly come back down to match its utility, which would mean more single families could afford homes again. This everything gets cheaper when priced in Bitcoin is already starting to happen. You can see on this slide by Wonkum that the average price of a home in the US in 2016 was nearly 1,000 Bitcoin. And now in 2024, the same home is worth 12 Bitcoin. As Bitcoin adoption continues, I expect this trend to continue as well. So it might be a good idea to start using Bitcoin as your wealth measuring stick instead of real estate. The next step in Bitcoin consuming the financial world that I want to talk about today is the huge catalyst of nation states adopting Bitcoin. Now, this has certainly been a hot topic as of late. Check out this clip from Fred Thiel, CEO of Marathon Digital Holdings, in this Bitcoin mining panel from an event in New York earlier this week.
Bitcoin is of national security concern for this country. Russia is the world's second largest Bitcoin mining nation. Countries that operate on a Bitcoin standard from a perspective of transacting and holding Bitcoin can transact outside of the sanctions environment. They can transact outside of government controls. If the US does not have a substantial amount of Bitcoin mining onshore, they can be locked out, and US companies can be locked out of transacting their Bitcoin. So strategic ownership of block space is of a national security concern. And that's why with 40% of global Bitcoin mining in the US must maintain dominance, not just in Bitcoin mining, but also in the holding of Bitcoin assets in US companies, whether they're ETFs, whether they're Bitcoin mining companies, whether it's MicroStrategy. But the US must maintain dominance because by the same reason the US holds 40% of the gold reserves in the world, they can exert influence in financial markets. They have to do that as the world transitions to digital currencies.
So Fred is stressing the point that if the US or any government wants to keep influence in global financial markets, they need to start adopting a Bitcoin strategy, and soon. Swan CEO Cory Klippsten talked about nation-state adoption with Kitco this week. Take a look.
In the broader view, I think it's inevitable that many nations hold Bitcoin on their balance sheet. I think it's pretty clear that there are some countries around the world beyond just the publicly obvious ones like El Salvador. I think there's enough industry rumor of accumulation by sovereign wealth funds, at least, and potentially even state entities in the Middle East, possibly China, almost certainly Russia, have been either buying or mining Bitcoin and stockpiling to some degree. So I think that's probably evidenced in the if you look at the Bitcoin mining network hash rate, and a quarter of it is the large public Bitcoin miners. The other 3/4, there are bound to be some large actors in that have a lot of hash rate, regardless of how well they're masking it.
Do you expect a sovereign nation to, other than El Salvador, to make some kind of big Bitcoin announcement at any point?
I do. I think that's probably a really good bet over the next 2 to 3 years.
Which countries would be top 3 there
on the list?
In likelihood? Yeah, high on the list.
Some of the Emiratis and Middle East, Saudi, something like that would be kind of high on the list of countries that would be good for marketing purposes and good for attracting business. So that's probably my number one horse in the race, would be somebody from that region.
So like the Saudis saying that they have Bitcoin as a reserve asset, that the Saudi central bank equivalent is buying Bitcoin.
Yeah, it seems like they already are mining Bitcoin. So I just think all that's left is doing the press release.
Does that trigger that whole FOMO game theory effect that, Bitcoiners have discussed, that sort of gets all the other central banks playing catch up then?
I still don't see it being a tipping point. It seems like it's a bit of a slow burn with these things. And I think we're just far away. I think it'll be $1 million a coin before you actually see a tipping point. And there's like a race among nations to add Bitcoin to their reserves.
To Cory and Max's point earlier, the Bitcoin hash rate has been going up in a straight line for years now, and recently hit another all-time high. This has increased the rumors that sovereign nations like China, Russia, and Saudi Arabia are already mining Bitcoin. I do want to say that I agree with Cory that all of the things we mentioned in this video are part of a very long game. Here at Swan, we try to stay away from any short-term price predictions for Bitcoin. This is because we don't want people leveraging their savings and throwing it at Bitcoin as a short-term gamble. The absolute best strategy for Bitcoin is to save in it over the long term. Don't try to time the market. You will lose. All of this we talked about today could take place over the next 10, 20, or even 30 plus years. And of course, it will be a bumpy and volatile ride along the way. So try to shift your time horizon a little further, stay calm, and save your value in the money that is designed to slowly eat the entire financial world over time. But of course, because we neither know the day nor the hour, it is important to get off zero. And you can do that through Swan. Visit swan.com or download the app at swan.com/app and begin buying and holding real Bitcoin in minutes with zero fees on your first $10,000. We also have great products like Swan IRA, Swan Private, and our new assisted custody solution, Swan Vault. Check out the best financial services company in Bitcoin at swan.com and start your journey towards financial freedom. That's it for today. Let me know what you think about this thesis in the comments. Like this video if you made it this far, and of course, subscribe to the channel for more Bitcoin Signal. Thanks for watching. TikTok, next block.